Hi everybody, it's me again, and I wanted to show you a chart here that I've got of microdrive balance sheets and assets, liability, and the balance sheet which shows the assets and the liabilities and equity, and then over here is an income statement. And what we're going to do is we're going to analyze this, and we're going to decide what we want to determine what the net investment in operating capital is between 2010 and 2009. So in order to do that, we want to take net operating working capital, and we're going to pull down. You can see we took the $10 in cash, $375 in accounts receivable, and $615 up there in inventories. And then we did the same for the $15,000, $315, and then $415. You can see we left off that short-term investment because that really is not an operating part of the business. And from those current assets, we deducted 60 accounts payable in 2010 and 30 in 2009. So you can see that. And then we deducted the accruals. We did not take out notes payable. So we come up with the net operating working capital of $800 for 2010 and $585 for 2009. And to that we add this net plant and equipment of $1,000 in 2010 and $870 in 2009. So we come up with a total net operating capital of $1,800 in 2010 and $1,455 in 2009, and that's an increase of $345. Now that increase in assets has to be financed, and we're going to talk about next how it gets financed, and that's through free cash flow. And free cash flow is determined as net operating profit after taxes minus the net investment in operating capital. So whatever we're going to take, NOPAT is going to be $170, and how that's calculated, we go up here in the income statement and we take $283.8, which is earnings before interest and taxes, and we're going to multiply it by 0.6, which is the after taxes. Taxes is 40%, so we take the reciprocal of that and multiply that by 0.6, which comes down here to 170.3. From that, that's net operating profit after taxes, NOPAT. And from that, we deduct this $345 increase. It's really thousands, so I guess I better say thousands. We're going to deduct $345,000 from that. So we come up with a negative free cash flow of $174.7. Now, what we're going to do with that, we're going to go over here in this economic value added. First of all, let's go down here to the return on operating capital, which is we take NOPAT, which is 170.3. I took one more. It's 170.28 and 157.8 for the preceding year. And from that, we are going to that's going to be divided by this 1,800 or 1,800,000, and we come up with a an ROIC, a return on operating capital, because the operating capital is that $1,800, and so our ROIC is net 0.46 for 2010 and 10.85 for 2011. Now, 9.46 is not good enough, because in this economic value added, EVA, we've got the NOPAT up there, and we've got that net operating total net operating capital of $1,800,000 and $1,455,000, and the weighted average cost of capital is 11%, and so 11% times that $1,800,000 is $198,000, and that's the dollar cost of capital, and that's what this return on operating capital needs to be, or at least that's what the NOPAT needs to be. So the return on operating capital is 9.46. It needs to be what? It needs to be 11%. And down here in the preceding year is 10.85%. And what does it need to be? 10.8%, so it's beat that situation. So here we got economic value added is NOPAT minus this dollar cost of capital, which is determined as 11% of $1,800,000. So EVA is a negative $27.7 thousand in 2010. In 2009, it's a positive 700,000. Or yeah, if we say this is in millions, but I think you can get the gist of what I'm saying. So that's EVA. That's economic value added. So in 2010, the intrinsic value of the firm was devalued just a little. In 2000, the preceding year, it went up just a little, but it's about a wash. Now, the last one we want to talk about is market value added. And the market value added takes the price per share, multiply it by the number of shares, and then that comes up with what is the market value of equity. That's $1,150,000 and $1,300,000 in the preceding year. And from that, we are going to deduct this total common equity of $896,000 and $840,000. And now, so the market value added, MBA, you take the difference between the market value of equity and the minus the book value, which says market value added has been increased by $254,000 in 2010 and $460,000 in 2009. These EVA and market value and economic value added EVA and market value added MVA are very important, and so is NOPAT and free cash flow. Those are new concepts which we're going to talk more about, and they're very important in how a business is evaluated and how we're going forward. Thank you very much. Look forward to seeing you in